topic, the quiet shift, how to stop trading time for money. Have you ever looked at your life, at your work, at the endless cycle of the 9 to 5, and felt that deep, nagging whisper, is this it? Is my financial future forever tied to the hours I put in, the energy I expend, the limits of my own time? You see others seemingly live life on their own terms, traveling, pursuing passions, or simply enjoying peace of mind, and you wonder, how did they break free? How did they stop trading their precious time for a paycheck? Today, on the Wealthwise Journey, we're going to explore one of the most profound and liberating shifts you can make in your financial life, the transition from trading hours for dollars to having assets generate dollars for you. This isn't about quitting your job tomorrow or becoming an overnight millionaire. It's about a fundamental change in mindset, a strategic realignment of your efforts, and a quiet, consistent journey toward true financial liberation. Many of us grew up with a simple, yet limiting, financial education: go to school, get a good job, work hard, save some money, and maybe, just maybe, you'll be comfortable in retirement. This model is based entirely on the hours for dollars equation. Your income is directly proportional to your effort and time. When you stop working, the income stops. This creates a relentless treadmill, a perpetual state of financial vulnerability where unexpected events, a layoff, an illness, or even just wanting to spend more time with family, become immediate financial crises. Think about it, the vast majority of people are firmly entrenched in this model. Doctors trade hours for fees. Consultants trade hours for project rates. Most employees trade their 40, 50, or 60 hours a week for a fixed salary. And while there's dignity and necessity in this, it inherently caps your potential. Your income is directly tied to a finite resource, your time. And eventually, you run out of time. The core struggle for many of us in this system is the inherent insecurity. We're always one paycheck away, one economic downturn away, one critical decision from being pushed off the edge. We work hard, we pay our dues, but the feeling of true financial control often remains elusive. This scarcity mindset can lead to stress, anxiety, and a feeling of being trapped. The key turning point, the decision that fundamentally shifts your financial trajectory, is when you consciously choose to challenge this hours for dollars paradigm. It's when you decide your salary is not the limit of your income, but rather the fuel for building something far greater, a portfolio of income-generating assets. It's the moment you realize your money can work for you, harder and more consistently than you ever could. This isn't just a financial decision, it's a profound mindset shift. It's moving from being a consumer of your income to becoming a creator of capital. It's transitioning from a scarcity mindset to an abundance mindset, where every dollar earned from your active work is viewed as a potential future employee, working tirelessly on your behalf. Let's delve into the core principles of this quiet shift. Understanding the two sides of income, the first step is to recognize the fundamental difference. Active income is what you get for trading your time, skills, and labor. Your 9 to 5 salary, freelance gigs, hourly wages. It stops when you stop working. Passive income is money earned from assets you own, where your direct, day-to-day involvement is minimal. Think of rent from property, dividends from stocks, interest from savings, royalties from intellectual property, or profits from a business that runs itself. The goal is to maximize your active income today to fund the growth of your passive income for tomorrow. The salary is seed money. For most of us, our 9 to 5 job is our primary source of capital. Instead of viewing your salary solely as money to cover expenses and perhaps a few indulgences, view a portion of it as precious seed money. This seed money is what you intentionally allocate to acquire assets. This means a disciplined approach to saving and investing, where a significant percentage of every paycheck is automatically directed towards building your asset base before you even consider discretionary spending. This is about prioritizing your future self. Identifying income-generating assets. What exactly are these assets for dollars? Investments. This is often the most accessible starting point. Think dividend stocks or ETFs, exchange-traded funds, that pay you a portion of company profits regularly. Think bonds that pay interest. Think low-cost index funds that provide broad market exposure and capital appreciation, which you can later convert into income. These assets work through compounding, where your earnings generate more earnings, creating a powerful snowball effect over time. Real estate. This can range from traditional rental properties to REITs, real estate investment trusts, or even fractional real estate investments. The asset, the property, generates rental income and often appreciates in value. This requires more capital and sometimes more management, but the income potential can be significant. Digital products and content. Creating an ebook, an online course, a popular blog with advertising, a YouTube channel, or even digital templates requires upfront effort. But once created, these assets can generate income for years with minimal ongoing work. Your initial investment is primarily time and expertise. Small businesses, scalable and automated. This could be an e-commerce store, a vending machine route, or even a laundromat. The goal here isn't to trade hours for every sale, but to build systems, hire staff, or outsource processes so the business functions and generates profit without your constant direct intervention. Automation is your best friend. The shift from active to passive income thrives on automation. Set up automatic transfers from your checking account to your investment accounts immediately after every payday. Automate dividend reinvestment. Automate bill payments. The less decision-making and manual effort required, the more consistent your progress will be. This eliminates the need for constant willpower and discipline, ensuring your money is always working towards building your asset base. What you don't see in your checking account, you're less likely to spend. Patience in the long game. This isn't a get-rich-quick scheme. Building a substantial portfolio of income-generating assets takes time, consistency, and patience. There will be market fluctuations, unexpected expenses, and moments of doubt. But the principle is clear: consistently adding to your asset base, letting compounding work its magic, and ignoring the noise will inevitably lead you to a powerful crossover point where your passive income begins to cover your living expenses. This is the moment your money truly starts to work for you. Let's consider an illustrative example. Imagine Sarah, working a steady 9 to 5. She earns a decent salary, but initially, every dollar is spent. Her life feels stable, but she's constantly aware that if her job disappeared, so would her income. This is the hours for dollars trap. Then, Sarah decides to make the shift. She starts with extreme frugality, cutting discretionary spending, and immediately directing $200 per paycheck into a low-cost dividend ETF. This ETF invests in a basket of stable companies that regularly pay out a portion of their profits to shareholders. Initially, her dividend payments are tiny, a few dollars a month. But Sarah is patient. She automates her investments, never misses a payment, and diligently reinvests every single dividend. Over time, as her investments grow, and as the companies in the ETF continue to pay and often increase their dividends, her monthly passive income starts to grow, slowly at first, then picking up speed. A few years in, she realizes her passive income covers her coffee habit. A few more years, and it covers her utility bill. She then diversifies, perhaps buying a small share in a REIT, adding another stream of income. Her active salary continues to fuel this growth, but now she sees her salary not as the end, but as the powerful means to acquire more income-generating assets. The turning point for Sarah isn't just a specific number in her bank account, it's a psychological one. It's the realization that she has built something independent of her active labor. She still works her 9 to 5, but the fear has receded. She knows that even if her job were gone tomorrow, her assets would continue to generate income, giving her time and options. This is the essence of moving from hours for dollars to assets for dollars. It grants you freedom and optionality. For those of us in the 9 to 5 world, this shift provides incredible benefits. Reduced financial stress. Knowing your assets are working for you creates a profound sense of security. The constant worry about unexpected expenses or job insecurity diminishes. Increased optionality. You gain the freedom to make choices not dictated by necessity. You can pursue a passion project, negotiate a better salary knowing you have a backup, take a sabbatical, or even retire earlier than planned. True wealth building. This is how genuine, long-term wealth is built. It's not about working harder or getting a massive raise, it's about making your money work harder for you, allowing for exponential growth. Legacy creation. The assets you build can continue to generate income for generations, creating a lasting legacy for your family and causes you care about. So, how do you start this quiet shift? Track your money like a hawk. You can't manage what you don't measure. Understand exactly where your money is going. Identify your money leaks, those small, unconscious expenses that siphon off potential investment capital. Optimize your savings rate. Look for ways to increase the percentage of your income that you save and invest. Can you cut unnecessary subscriptions? Cook more at home? Challenge your biggest expenses like housing or transportation? Every dollar saved is a dollar that can go to work for you. Automate everything. Set up automatic transfers to your investment accounts. Make it non-negotiable. Pay your future self first, before any other bills or spending. Educate yourself continuously. Understand the different types of income-generating assets. Learn about dividend investing, real estate, or how to create digital products. The more you know, the smarter your decisions will be. Start small. Start now. You don't need a huge sum of money to begin. Even $50 a month consistently invested in a low-cost ETF is powerful over decades. The most important thing is to start, and to be consistent. This journey from trading hours for dollars to having assets generate income is not about denying yourself a good life. It's about redefining what a good life truly means. It's about moving from a life dictated by the clock to a life empowered by choice. It's about realizing that your salary is not the ceiling of your financial potential, but the launch pad for your deepest aspirations. If the idea of your money working for you, tirelessly, silently, resonates deeply within you, then you belong here on the Wealthwise Journey. This quiet shift is not just a financial strategy, it's a pathway to profound peace of mind and true liberation. Subscribe now, hit that notification bell, and join our growing community dedicated to building financial independence, achieving early retirement, and mastering smart wealth building, all while navigating the realities of your 9-to-5. Share this transformative concept with someone who's tired of the hours for dollars treadmill. And in the comments below, tell me, what's one income-generating asset you're excited to start building, or expand upon, this week? Because your Wealthwise journey isn't just about accumulating money. It's about accumulating freedom.